Good day, everyone, and welcome to the Forward Prosperity Finance and Economics Update covering July 2026. I'm Russell Gard, Managing Director at Forward Prosperity, and today we'll walk through the key financial and economic indicators that matter most to investors and households. The key indicators and metrics we will cover are the Australian government bond yield curve and spreads, Australian and US equity markets, the Australian dollar, the Reserve Bank of Australia's foreign exchange and gold reserves, the total broad money supply, recent federal government bond issuance, and the total level of national government debt. Australian government bond market. Looking at the government bond yield curve, we can see a clear downward shift between the end of April and the end of June. The 30-year bond yield fell by 5 basis points to finish June at 5.26%. Shorter dated yields also moved lower across the curve, which suggests that the market is pricing in a slightly more accommodative outlook or reduced inflation pressure compared with a couple of months earlier. When it comes to assessing bond yields, the shape of the yield curve is also very important. So, looking now at the 10-year versus 2-year spread, a classic measure of the yield curve steepness, this spread stood at 0.32% at the end of both May and June. That is only a modest increase from the 0.29% recorded at the end of April. And in practical terms, when the curve remains relatively flat, this is historically associated with cautious economic growth expectations and likely reflects the current scenario of falling headline inflation, but more persistent core inflation. Turning to equity markets, the ASX 200 had a volatile first half of 2026. After peaking above 9,200 Australian dollars in March, the index fell sharply, briefly touching around 8,366 in April, before recovering to close June near 8,800 Australian dollars. While the domestic Australian stock market has stabilised, it remains well below its earlier highs, reflecting ongoing uncertainty around interest rates, as well as both global and domestic economic growth. In contrast to the Australian stock market, the S&P 500 in the United States showed a more decisive recovery in pricing. After dropping to approximately 6,344 US dollars in April, the index rallied strongly and finished June near $7,500, just below its recent peak of around 7,610 US dollars. US equities have clearly outperformed their Australian counterparts over this period. Taking a look now at foreign exchange, the Australian dollar against the US dollar also experienced significant swings. After starting the year near 67 US cents, the Australian dollar strengthened to a high of about 72 US cents and 51 pip in May before weakening again, finishing June around 69 US cents and 11 pip. Currency volatility remains elevated and continues to influence both import costs and the earnings of Australian companies with overseas exposure. At the Reserve Bank of Australia's own balance sheet, the value of foreign exchange and gold reserves has shifted around considerably. After declining earlier in the year, the central bank's reserves recovered and finished June near 115.4 billion Australian dollars. These movements reflect both valuation changes and active management of the nation's reserve assets. The Reserve Bank of Australia's foreign exchange and gold reserves provide the central bank a very important ability, which is that it allows the RBA to stabilise the Australian dollar if needed. Australia has a floating exchange rate, meaning the value of the Australian dollar usually goes up and down based on the market forces of demand and supply. Considering this, during periods of extreme market panic or severe market dysfunction, the RBA can step in and help promote more stability for our national currency and its respective exchange rates. On the monetary side, total Australian broad money, which measures the total stock of liquid assets in the economy, has continued its steady upward trend. From just over $3.15 trillion in early 2025, broad money has risen consistently and is now approaching 3.5 trillion Australian dollars. This ongoing expansion of the money supply is an important backdrop for both inflation and asset prices. The greater the supply of any currency, the less valuable that currency becomes, purely due to the fact that it is becoming more common and less scarce with respect to the supply of general goods and services. In terms of the Australian labour market, unemployment has remained resilient. The unemployment rate rose from 4.1% in January to a peak of 4.5% in April, but then settled back down and held steady at 4.4% in both May and June. While not as tight as it was earlier, the Australian labour market is still relatively firm by historical standards, which actually gives the Reserve Bank of Australia potentially more reasoning to further increase the cash rate if needed. On the funding side, the Australian Office of Financial Management issued a total of $3.7 billion worth of federal government bonds in June. Federal government bond issuance was spread across several dates, with larger amounts on the 10th and 23rd of the June month. And finally, looking at the state of debt, Australian federal government debt rose through the first part of 2026, reaching a high near $994 billion before easing slightly to around $971 billion by the middle of the year. This upward trend in national debt remains an important medium-term consideration for markets, policymakers, and individuals, as excessive government debt can create more difficult conditions for future generations who will eventually be responsible for paying back all that money. So, to summarize, bond yields have eased modestly and the yield curve remains flat. Australian equities have lagged the strong recovery in US markets, while the Australian dollar has been volatile this year. The money supply continues to expand, unemployment has stabilised at 4.4%, and the Australian government debt levels remain elevated. These are the key numbers and trends we are watching closely at Forward Prosperity as we help navigate clients in different economic and financial environments. If you would like to discuss how these developments may affect your personal, family, or business goals, we would be delighted to help. You can book a free assessment at www.forwardprosperity.com. Also, if you took any value from this presentation, then hit that like button, comment your biggest question below, and subscribe to the Forward Prosperity YouTube channel for more economics and financial updates. Thank you so much for your time, and we look forward to speaking with you soon. Thank you.